Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 12th of June. All right, now, big week ahead. Obviously, the US CPI numbers Tuesday, massively in focus, and everything's balancing on these. Now, if you just read the news services, they are sort of running out of sort of things to talk about. Okay, they're talking about, the Canadian rate hike and like just things that are happening or have happened. Saying the dollar gains before Fed meeting, inflation data. I tell you what, you got to take some of this stuff with a grain of salt, right? And I keep saying this, they've got a job, the news services, and it's to sell marketing or advertising. But the dollar, well, if anything, you can see it's come off. It must have bounced like 15 or 20 points. I wouldn't be calling that a bounce in anyone's sort of, books, really. But what I'm seeing very clearly, this is where the CPI comes in at a perfect time. Okay, we've got the euro sort of bouncing to the top side. The equity markets, okay, they are rallying. Now, the Nasdaq's obviously been rallying a lot, but that move in the equity markets tells me that the markets aren't really concerned about any further Fed rate hikes. Tuesday's data is going to give us the answer, but to me, everything is gearing up towards a weaker dollar. Okay, you've got a weak economic background and also, potential for no rate hikes. Now, that can change in a heartbeat, obviously, with the CPI numbers. But even if I switch over here to the currencies, right, you look at what's going on. We've got the setup, okay, dollar drifting lower, dollar yen sort of doing a bit of its own thing, but obviously dollar Swiss lower. Now, dollar CAD, the Bank of Canada raised rates. Unemployment figures weren't exactly great, but everything is signaling like the UK economy, the Canadian economy is overheating, and it looks clearly on track to go down. Okay, and that goes with the weaker dollar as well. Obviously, we've had that spike up in the euro with the weak dollar, a little bit of a profit taking over the weekend or before the weekend. And Aussie, Kiwi, Sterling all look ready to go topside. Okay, so looking at the picture here with the equity markets, if anything, I reckon the market's getting positioned for no further rate hikes by the Fed, a weaker dollar overall, and we see all these other instruments rally. Right, that's where we're at. All we need is weaker CPI numbers. Are we going to get it? Well, I don't know, but everything's sort of lining up quite perfectly for that situation. So to me, there's not much to be doing today, Monday. I would be sort of really tuning up your charts, trying to work out what's going on. Obviously, to start the week, we've got a US equity futures up. Okay, that's going to put a little bit of a positive tone on global equity markets. It's not exactly doing much for the currencies. Everyone's going to be waiting for this data, right? Now, if I just come down, if you have a look through, there's a little bits and pieces out Monday, but really when you come into Tuesday's trading, the focus, we've got UK employment numbers, okay, ahead of the US CPI numbers, and that's sterling's just going up. So it works well with sterling, and the ZEW numbers out of the Germany, right? And then you've come to the big numbers here, the US CPI numbers. This is what we're sort of looking at. The picture has been painted, right? So we're going to get movements either way. I was just going to say, if we get weaker CPI numbers, it takes the pressure off the Fed, no further rate hikes. We're seeing a lot of weak numbers in the US already. Equity markets will rally and the dollar will fall. Now, if we, for some weird reason, get a very strong inflation number, and there's a bit of a hint of it in the commentaries that you'll see, then we get this turnaround. Maybe the dollar comes back, we're looking at further rate hikes, and the equity markets get crushed. If anything, we're at the perfect position to be trading both sides of the market. Okay, and that's, I think there's some big moves to be had across the equities, currencies, and probably even the commodities for that matter. So that's all you need to be doing is focus on the news that's coming out. You can just get yourself up abreast of what is expected out there as far as the Fed. Okay, keep an eye on any sort of random news. I mean, the Trump stories out there at the moment are a good distraction for the news services as we await the real big stuff, which is obviously the US CPI numbers. And that'll give us the answers for the next month of trading. Well, definitely the next 2 weeks will be very aggressive, and then we can pick the eyes out of it. All right, first time in a while that we've got all these geopolitical events out of the way. which is a great thing. And then we can come back and really focus on the core markets themselves. All right, guys, that's it from me. Have a good day. I'll be updating you more on the US CPI numbers tomorrow. Just hang in there. Not long to wait now. Cheerio.